Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Sara Mehle, Index Research Strategist with Nasdaq Investment Intelligence, to discuss an index suite that applies relative strength to sectors. Sara, it's great to see you as always. Welcome back to Trade Talks and give us a broad overview of this suite.
Hey, Jill, good to see you. So yes, today just wanted to go over high level some of the 101s, if you will, around the Dorsey Wright Technical Leaders Sector Index Suite. So we're applying the same methodology here across 9 different sectors. So we're looking at consumer cyclicals, staples, energy, tech, financials, utilities, healthcare, industrials, and basic materials. And what we do, we start with the universe of about 3,000 U.S. listed stocks. So that includes small, mid, and large cap. And we take that 3,000 stock universe and we run it through a liquidity screen. That leaves us with about 2,000 names. So from there, we take those 2,000 names and we classify them into one of those 9 sectors that I mentioned. From there, each of the sector portfolios are going to run individually. So then we take all the names, let's say in the tech list, and we're going to run a relative strength ranking where we're comparing each of the price movement to one another, really just to get a list of the strongest. So it's going to be ranked from strongest to weakest, again, based on relative strength. And then each of these sector portfolios is going to own the top 30 to 75 names, just depending on the amount of strength across the names. If we see small and mid cap names kind of in favor over large cap, we would expect to see these portfolios a little larger, more towards that 75 range. But again, typically the 30 to 75 names. And what we're doing is we're just taking this relative strength methodology and applying it across different sectors so that each ends up as, again, its own sector portfolio, which then these indexes are tracked by a suite of Invesco ETFs.
And let's take an even deeper dive under the hood of what's behind the methodology.
Yeah, so each of these strategies is evaluated quarterly just to stay aligned with current trends. You know, some of our indexes are rebalanced or reconstituted once a year, quarterly, monthly, but these are going to be quarterly just so that we can stay up again with those current trends. And like I mentioned, it does include small, mid, and large cap U.S. stocks. So depending on, you know, what's in favor, you might see more large cap exposure, more small, again, depending on just the overall market environment. Again, the number of holdings can range from 30 to 75. And the index members are weighted on momentum. So the stronger relative strength or the stronger the ranking that stock is in that overall ranking that drives those 30 holdings, the higher the weight. So the stronger the stock, the higher the weight. And again, as I mentioned, tracked by the suite of Invesco sector ETFs here in the United States.
And finally, Sara, let's take a look at near-term and longer-term performance of these indexes.
So I just wanted to take a look at year-to-date performance. Up there at the top is technology, followed by industrials. The tech relative strength portfolio here up 36%, followed by industrials, up about 36% as well. Down at the bottom, I noticed, though, utilities, even with returns factored, dividends factored in, down about 5%. Healthcare also in the red. Energy up about 3%. So, you know, these are some trends that we saw throughout the year. Those tech names really driving the returns, as we mentioned, you know, kind of on the Nasdaq 100 Trade Talks a few days ago, but really those tech and industrial names, and then also up there with consumer cyclicals. And then we can also take a step back and look at these portfolios over the last 10 years. And we know that not every sector is going to be in favor every year, but over the long term, it really has been that technology sector driving here again since December of 2013, with the technology sector up about 365%. Right there behind it, healthcare. And again, down in the red, we have energy, even with dividends factored in, down about 4.5% over the last 10 years. Even though we have seen a burst in energy, you know, over the past few years, we did see strength in that particular index. But overall, you know, it's that tech sector that does continue to lead, as we've you know mentioned many times this year. But just wanted today again to go over just the suite of indexes. It takes the same methodology, overlays it across 9 different sectors, giving you 9 very different sector portfolios that incorporate relative strength.
All right, Sara, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.